Good afternoon, Jaguars. This is Fahad. I'm back. So today my pick is Lam Research, symbol LRCX, Lam Research. Once again, as usual, as every single time we do this, we're going to evaluate this particular opportunity, this particular trade based on the same three-prong approach, the fundamentals, technicals, and unusual option activity. So let's take a look at the chart first. Now here you're looking at a daily chart of Lam Research. This is a daily, year-long, one-year chart. It's basically nothing but just a giant, just a lot of chop fest. It's down, it's up, it's down, it's up, it's down, and it's up again. It's this big, range of $64 to $84 level. That's a 20-point range. So you're not going to learn much, unless you're trying to swing this trade at the bottom of the range and then selling it at the top of the range. You're not really going to get much actually information out of this chart in terms of the long-term trend. So for that, you have to go to the weekly chart. Here's your weekly chart. If I actually expand this even further to a 5-year chart, there is your weekly chart. Once again, note I have removed all kinds of moving averages from these charts because I don't care about them, but that's your look right here. See how this had a beautiful rally in 2012 and 2013, and it continued to move higher. And basically for the last year and a half, it has been forming this giant consolidation pattern. Now, notice how it comes up to 85 and then it pulls back, all right? Comes up to 85 and pulls back. It has tried multiple times. But the biggest thing you want to notice over here on this long-term weekly chart is that previously when it was pulling back, it was making lower lows. So here's a lower low, here's a lower low. And then it did not make a lower low in January, February time frame. So basically forming this inverse head and shoulders formation right here, where this is your left shoulder, this is your right shoulder, and this is your head. So this is the inverse head and shoulder formation with a big neckline at 85. Once again, and when it pulled back in May, it did not make a lower low. It basically made a higher low. And then most recently, though, the power candles that we saw on the weekly basis, these last 2 weeks power candles were extremely strong on very high volume. So coming out of this May low, it really pushed higher on very high volume. And once again, it's coming to stall right here at 85. But overall, this pattern has become constructive over this large year and a half long consolidation. So what I'm looking for is a breakout through 85. Okay? Now, unfortunately, when you're looking at something that long of a consolidation on a weekly chart frame and you're looking for an all-time high breakout on the stock, you're not really going to have price targets so easily set. Okay, so because you're evaluating, and if you're going to evaluate this stock on a technical basis, you're going to say, okay, I don't know, it's going to break out to this space right here. I don't know where it's going to stop. Is it going to stop at 90, 95? So putting a price target on it on a breakout, we don't quite know yet. So we're going to, later in this video, we're going to actually come up with a price target based on the fundamentals, based on the valuations where the stock should go. For now, this is what's important. On a technical basis, I'm looking for a breakout through 85 and an easy run up to 90 at least. And after that 90, we'll see what happens next. All right. On another way of looking at this, this is the chart from stock charts. Same technical picture over here, just a different look. Basically this long consolidation comes up to 85, pulls back, pulls back, pulls back, pulls back. But now it's starting to make higher low consistently, and I'm looking for this. Stock charts is basically showing this major volume of price resistance around 82.50. Well, the stock is slightly above that already. Either way, call it between 82.50 or 85. This is your congestion area, and so I'm looking for this to eventually break out through this on high volume through 85 and make a run towards $90 a share. All right, so that's a technical look. Now on the option side, now pull up the option chain, and you're going to see some very interesting activity. Go to September, and you're going to see this 2,500 volume in September 85 calls. All these 2,500 contracts were bought today for $3.60 offer side. All right, so that's approximately, if I do a quick math, that's approximately 3.6 times 100 times 25. That's about $900,000 worth of calls bought. At September 85 strike calls. To further break down that activity, this is the picture from LiveVol. Okay, so you can see that this happened around this afternoon at around 1:02 p.m. Eastern time. All right, so this was about 45 minutes ago at 13:03 military time at 1:03 p.m. Eastern time. They came, they bought a whole bunch of these lots, 500, 500, and all these lots. They paid from 355 all the way to $3.60 offer side. And the implied volatility jumped accordingly immediately after that. But so that's a pretty good size bet, and it's trading 3 times daily average call volume. But that's not the only story. I'm going to close this out, and I'm going to show you what we have been recording in the activity tracker. So if I go here, here's the activity tracker. If you're not familiar with this, you should get familiar with this. So it's available under Jaguar Options Pro. So if you click here, Jaguar Options Pro, all right. Let me just show you how you get there. You go to activity tracker, you click here, and this is where we record under activity tracker all kinds of option activities that take place, including my nodes, my fundamental nodes, as well as the chart. So if I just type in LRCX, you will notice that back on May 25th, which was less than 2 weeks ago, they bought 2,800 of July 82.5 calls for up to $1.80. That's right over here in the option change. You're going to see July 82.5 calls, and you can see this right here. Now these calls have moved up significantly since then, and now they're going for 290, but they're holding in the open interest. Go back further, just less than a week before that. Actually, this is April. On April 21st, so about a month before that, there was a big buyer of 2,600 leaps this time, January 17, 82.5 strike calls, and in that case, they paid up to $7. So that's, if you go to the option change, you scroll down, you're going to see that all the way right here. January 17, 82.5 strike calls. Look at the open interest, it's 3,900. 2,500, some of that was bought for up to $7. Back in April. Now they're going for 720 to 750, so they're slightly positive. They're about 5 to 10% higher than where they were bought, and they also remain in open interest. You can further drill down on this, and you'll see that there was a bullish risk reversals also done at some point, which was they sold January 17 75 strike puts right here to finance January 17 90 strike calls. So that's 75-90 bullish risk reversal, but was done about 1,000 contract, and there was also a while back that remains in the open interest. So basically, you have bullish call activity in July, you have bullish call activity in September, and you have bullish call activity in January 17. It's all bullish, and it's pretty big time. I did the quick math around it. They have bought approximately $3.2 million worth of call options since April. So pretty bullish bet. Technicals, the weekly is setting up for a breakout. So what's the story here on the fundamental side? 2 pieces of fundamental story. You want to keep this thing in your mind. 2 pieces. Both are moving parts, but both of them, that's most important, both of them, in my view, are not fully baked into consensus view. And I'm going to show you why. Okay, both of them are not fully baked into consensus view. Now keep in mind one thing. All right, here's the back to daily chart right here. See right here? This big sell-off that we saw in October, in late September, in October right here. Back then, the company bought, Lam Research bought KLA, the semi. The other semi company, KLA 10 Core, they bought it for $10.8 billion transaction. Okay, it was a very large transaction, very large merger in the semi space, and that transaction has not been closed yet. That transaction, according to RBC Capital Note, which is right here, I'm going to populate this. If you go here, you'll see, according to RBC Capital, on May 13, this is the most recent note they have, on May 13, Lam and KLAC announced that they each received a second request from U.S. Department of Justice, DOJ, regarding the pending merger of the 2 companies. The companies are working with the DOJ staff on the terms of resolving the DOJ concerns. We note that the deal has obtained regulatory approval from Germany, Ireland, Israel, and Taiwan. The companies are working to gain approvals from the U.S., China, Japan, and South Korea. Okay, management now expects that the deal to close in the 3rd calendar quarter, a slight push out from the previous expectations of mid of the year, but in line with their expectation of September close. So what's the big catalyst over here? The merger with KLAC will close sometime now in the September quarter. Well, September quarter means that we're already in June. In a couple of weeks, June is going to be over, and then we're going to be in the third quarter already. So any time after this month end, we're going to see we could get an approval. And they have already got the approval in Germany, Ireland, Israel, and Taiwan. So I have a feeling this thing is going to easily pass in US, China, Japan, and South Korea as well. And I have a feeling once the US actually crosses this, then it's going to be easy slam dunk for almost everybody to just give the final approval. But what's most important in this particular case is how the consensus is modeling the forward earnings estimates once this merger has closed. Wide expectations are, including from the company, including from everybody, that this particular acquisition will be 10% accretive immediately. Will be 10% accretive immediately. And when that happens, you're going to see a basically consensus move the estimates higher sharply. But have they? No, they have not. I can just show you right here. This is in the same exact report. Look at the RBC capital estimates. Okay, these are the RBC estimates. Look at fiscal year 2017. The EPS diluted estimates is $6.92. It has not been changed. Okay, but if you go down here, you will see right here, they talk about we now see $8.57 EPS in calendar year 2017, which is 27% accretion based on our base case. And that's based on this merger approving, KLSE merger approving in the third quarter. So these estimates, 692, are going to sharply move higher. All right, when that happens. To show you another way of looking at it, all you have to do is just you'll go here, and this is what I would like to show all the time. This is the simple Ameritrade view. And this is how the consensus is looking at. This is right here is the late October 2015 when the merger was announced. Pay close attention to what the fiscal year 2017 EPS was. You can see on your screen right here, it was about $6.56. This was in October. Scroll down to this orange all the way here. It's still around $6.87. Yet at the same time, everybody is talking about huge synergies to come into play, and I think this number is going to ramp higher towards $8 a share, and the consensus has not moved the estimates higher. All right, that's another way. Another way I can show you is right here. This is the Bank of America research, and it talks about exactly the same thing. Okay, it talks about the consensus view sharply moving higher, but nobody is willing to move the estimates higher. They're all talking about this KLSE merger is going to be 10% accretive. Right here, that talks about, where is it? Furthermore, KLSE could be at least 10% accretive to LRCS earnings, $8 EPS, and positions the combined company to continue benefiting from strong industry trends. Well, if you believe it's going to be $8 EPS, why have you not moved the consensus estimates higher? They have not. Okay, nobody is moving the estimates higher until the merger actually approves. And so that's why everybody is sitting on sidelines. So this was Bank of America. Note, I'll show you another one. This one comes from Credit Suisse. Credit Suisse once a quarter presents basically their top picks for the following quarter, the quarter that is starting. Okay, so on June 1st, right here, June 1st, which was just a couple days ago, Credit Suisse put out their top picks in the semiconductor space. And in the semiconductor space, they talked about Lam Research. This was their top pick, LRCX. And the analyst goes to show, increasing SM opportunity, 3NNT and multi-patterning logic, blah, blah. Post-KLSE merger, the company will have the highest margins, highest growth, and have similar exposure to memory logic as ASML and Applied Material. We expect that the multiple will expand as investors realize the quality of LRCX core businesses. Multiple will expand. Now keep in mind what that means. The stock is currently trading at what price? The stock is currently trading at $83 a share. With the earnings projections supposed to be at $8 per share, that means it's trading at 10 times forward earnings after the merger is closed with KLSE. That makes it trough valuation. I can tell you this, I went back and looked at what the forward PE multiples were at any given time during last 5 years of the company, and I see them at 11, 12 times earnings. But post-KLSE merger, the multiple on the stock will be 10 times earnings, and yet it will have the highest margin business than in the entire semi space. That's yet another case of the bullish view, so that makes it another more attractive. So, and then the last thing I will show you, if you go over here, We covered this. If you just go to the first read that we issued on June 2nd. Okay, June 2nd when we issued, this is the first read that goes out every single morning. On this very particular note, in first read at Jaguar Analytics, we talked about semis. We especially focused on the semis. Go down to the last page of that, and you'll see right here's the view, SOX Semiconductor Index. And we talked about how the long-term trend in semis is starting to break out. We talk about some of the semis that are in very strong uptrends, which included LRCX. And here is SOX right here. So if I just make it bigger so you can see, here is the chart of SOX. It's a long-term trend, multi-year trend, and finally starting to break out. Same chart over here. Very long consolidation in SOX Semiconductor Index and finally starting to break out. Basically, the point over here is that you have good sector headwinds behind this too. You got pretty good, basically the entire sector is performing as well, which makes me even more attractive on some of these stocks, especially LRCX. So that was all one catalyst. That was all talking about one most important thing, right? So I said there are two catalysts. One was the actual closing of the merger, which is expected to happen sometime now in the September quarter. And then there's another thing you need to keep in mind. And this is the kind of fundamental view. This is the kind of fundamental information that I hunt for. Every time, I don't pull up these research reports that I get from all these analysts and just basically start plowing through them and just start believing everything they say. I have to find important elements, important things that basically stick out, that tell me that that there's a disconnect between the story based on where the street expectations are versus what the companies are doing in the main street. That's the whole idea of doing this fundamental research. So here, I want to show you a very interesting note from UBS, which I believe is not fully baked into consensus view. This one came out on June 2nd, okay? And here's the excerpt from that. The monthly China fab tracker shows that the four big incumbent China fabs continue to buy high levels of semi-cap from Lam Research. The new tracker shows that Intel China's fab semi-cap purchases last month increased significantly by 30% month over month to $260 million. The analyst believes most of this was ETCH tools, about 45%, and CVD, blah, blah. The tracker also shows Intel chips purchases of raw 300 millimeter wafers was only 10,000. So it goes on. But here's the kicker line, which caught my attention. The tracker also still shows that there were no big purchases from any of the indigenous China customers, XMC, Huawei, HS Grace. If XMC spends $6 billion in capex to build a 3D NAND fab, this adds to Lam Research EPS by $1.75, not in the model. Right here. So basically, you have a bunch of customers that actually are not doing any large purchases from the Chinese. And so the analyst is making a case over here. If XMC spends $6 billion of capex to build this 3D NAND fab, this could add Lam Research $1.75 to the bottom line EPS, and it's not in the consensus model. Here's something funny. All right, because this thing is completely outside of the box. This one is not even taking account. This particular note from UBS is not even taking account the actual accretion we're going to see from KLAC either. That's a completely separate issue. So you have two major catalysts, both coming in hard at the stock. One, if the merger closes with KLNC sometime in September, you're going to see the consensus raise estimates all the way to $8 to $8.50. And secondly, even if the merger does not close, on its own, Lam Research is going after a large $6 billion capex that they're expecting from XMAC on the 3D NAND fab. And the analyst is making a case that as a standalone company, LRC, this could add to $1.75 to the total bottom line EPS. That means the forward consensus on its own can move higher to $8.50. Bring the two catalysts together, and you could be looking at $10 earning power for Lam Research. $10 earning powers with stock trading is $8.30. That means the forward earnings, the forward multiple ratio is going to be 8.3x. That's way too low, and it's not going to stay here. I think the stock could pop big time when both of these catalysts come through to all the way to $100 per share, maybe to $110 per share. And so This note, by the way, June 2nd, is available to you if you just simply go to Activity Tracker and just pull up my note from here so you can read more about it. The final thing here, it also talks about fantastic quarter the company put out on April 21st, and it goes through EPS speed, inline revenues, guidance was raised big time, $1.63 to $1.54. Shipment outlook, Q4 shipment outlook was raised to 9% year over year versus 5% street estimate, which is telling me the future is pretty bright. So all these notes are actually available to you on Activity Tracker. Just go and take a look over there. All right. So here's my bull case. You have a chart that on a weekly that is now finally setting up for a major breakout. All right. You have option activity that is piling into September 85 calls, and previously they have been buying July as well as leave January 17 calls. And lastly, we just went through the big fundamental exercise. There are two catalysts in play. I expect when the company reports earnings, right here, it's going to be sometime in July 27, so late July. They have not confirmed. You're going to see this thing pop through $90, through $85 or $86 and make a run through $90. So just based as a standalone company. And secondly, if the merger comes through in September, I think it's going to pop again. This is beautiful consolidation and a bull flag near all-time highs. I think if it breaks out, you're gonna see everybody on Twitter sphere as well as on CNBC will be talking about this. I want you positioned in the stock and call options before everybody starts talking about it, and that means the trade here is to just go to September and buy straight September 85 calls. No spreads necessary. The volatility is cheap as is. It's 26%. Just go straight to September and buy September 85 calls for $3.80 and less. That's the trade.